Hi, Steve Sosnick here with today's Interactive Brokers Morning Market Morsel for Friday, March the 8th. It's been a wild one already today. We were coming in expecting a down day, largely because of bad news out of China. China's markets, depending on which one you watch, were down 3, 4, 5%. So that's really not off to a very good start. And then you throw in on top of it the employment numbers. It did look like a misprint at first, 20,000. Just didn't seem like a number that was even comprehensible when you're talking about a low estimate of a roughly 80,000. The other numbers seem okay in terms of unemployment rates, so immediately the chorus starts that this was temporary, it was a glitch, according to Larry Kudlow. Um, I don't know what to read about it. One of the potential sources of blame is the weather. I never trust it when anyone blames the weather because everybody has weather. But whether or not that's true, we saw a big reaction in the equity markets, and that's what we're looking at right now. As we're doing this, which is shortly after 11 o'clock, markets have bounced off their lows. Looked like they were going to try to recoup most of the gains, but now they seem to be selling off a bit. I expect a fairly choppy trading for the rest of the day. The other thing I'd keep an eye on is the Monday morning story that seems to inevitably come out about improving trade talks with China. Larry Kudlow was out sort of talking the story up on various media appearances, and more importantly, the president was out there talking about the stock markets. I always get worried when government officials look like they're trying to manage the stock market because that rarely ends well. And there have been stories all week, which I guess shouldn't come as a surprise to anybody, that the president is sort of managing the China trade process with an eye to the equity markets. If that's the case, I think that raises the problem that you could end up getting a deal that's a deal for the deal's sake, not necessarily addressing the real structural problems that I think the whole effort seemed to address. All in all, this is choppy trading. We have come off the highs, as you can see. We've actually put in a fairly lackluster week if you're a bull. Right now, the 200-day moving average comes into play. We went up fairly quickly through it. We've actually come down a little bit through it, but that might remain a bit of a level to keep an eye on. That could possibly cap a rally if you get the knee-jerk reaction Monday morning to a trade story that's not an actual story. Let's see where it goes. Have a good rest of the day. Have a good rest of the week, and enjoy. Have a good speak to you Monday. Bye.